Hello everybody. So this video is entitled NBIS Gets Cheap as Nebius Gets Squeezed. Two of my favorite stocks as of last week, as of 6 days ago, are headed in the total different direction, with NBIS being down essentially 10% since its earnings, which by the way were absolutely stellar earnings. I did a full video on that. I have nothing to complain about NBIS earnings. Absolutely nothing. Only the super short-term investor would nitpick on a few things that were in the NBIS report. In my view, NBIS was absolutely stellar earnings. And here's the thing, Nebius too. Nebius also had absolutely stellar earnings. But the better question is that does that warrant the stock going from like 182 intraday at the beginning of last week to 278? Does this really warrant a 50% upside? So that's why I call this a valuation disconnect. We've had, in my view, two very stellar earnings reports, and yet you have NBIS who's down 10%, and then you have Nebius who's up 50%. So the casino is alive and well. The market is still behaving like a casino. So first of all, let me focus on the opportunity. What I think the opportunity is with these two stocks is NBIS. I think NBIS is an opportunity. I don't understand how we're down 10% from those earnings. Those earnings were, in my view, outstanding. I mean, the growth that was guided was 38% midpoint for a business that people were claiming growth was dead last year. And you still have people claiming that, saying, oh, it was growth by acquisition, ignoring the fact that actually if you remove the acquisition, the growth was 17% for NBIS, and that's without all of the catalysts that are coming up, and without the full steam of GLP-1s, of branded GLP-1s, picking up steam, ramping really, really fast. And I try to see people make narratives as to why NBIS is down, and to me, it's the price who makes the narrative. So the price is down 10% since earnings, and people are trying to find a narrative. I saw some folks arguing that Roe is taking share, and I've been following NBIS for a long time. Folks arguing that Roe is taking share is a very, very old narrative. You may remember last year it was trendy to show App Store ranking of Roe versus NBIS, and Roe was consistently ranked above NBIS, and people were conveniently leaving out, for example, that there's no Android app at Roe, or they were completely leaving out that NBIS is really NBIS and hers, two different apps, and they were using different time periods and different windows to show that Roe was actually outperforming NBIS when it was not the case. So you have people making that argument again about Roe. But here's the thing, there's a few things to say. First of all, is the pie is big enough for a few players, right? I mean, you have other ones. You have Lily Direct. You have, what is it called? Like the president of the US has one of his websites. We have quite a few of his websites. LifeMD has a little one going on. There's a lot of these websites. That's fine. The pie is growing. This is what I think people don't understand, is the GLP pie is growing very, 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 very fast. By the way, it's about to grow much faster when Reta gets approved, perhaps in early 2027. I mean, that would be my guess, early 27. So that's point number one. And then point number two, people also say, oh, NBIS is down because the gross margin dropped to 65%. But I've been looking into this a little more. The reason why the gross margin is down so much is because there is an aggressive price war going on, especially in the first 3 months or the first month of enrollment. When people sign up for these GLP-1s, they want to get a low number up front, and so there's a competition as to how little each company is going to charge for the first month, and then of course they raise the price and they charge the full $149, for example, in the case of NBIS. But the other players do exactly the same thing. So they have this aggressive price war competition going on, and that's dropping the gross margin. But if you actually look at the gross margin dropping, that also means that the marketing return on investment is actually going up. Why? Because if you drop your price, you naturally become a little more compelling, and you may need a little bit less of advertising. And so you become more compelling because the price is better, and so you need to advertise a little less. That's my explanation for that. But here's the thing, of course, if you drop your prices, that's going to be reflected in your gross profit number being lower, your gross profit margin being lower. I also want to point out that NBIS is all about efficiency right now. They highlighted that many times on the call. They're pushing AI. They're going through AI chatbots, answering something like 80% of some of the requests of people. They're moving towards more lean teams. They're doing very well on being lean, actually. Bigger factories, bigger scale. The scale, right? They're going to scale. So what does that mean in terms of gross margin? Well, it means that the more you have these improvements at HIMSS, the more actually margin is going to improve. Margin is going to improve because the scale is going to mean that they can procure all of their drugs at a lower price, and they can negotiate better prices. And of course, they use fewer employees. Each goods has fewer employees unit of labor in it. So I think the gross margin, to me, that's why in my spreadsheet I use 69%. I think this is a temporary drop, mostly due to the price war. I'm not so sure this drop is forever, like the bears would have you look at. And this is the most important part of this, is that most of the argument is backwards looking, right? Most of the argument is looking at competition row against HIMSS as if it was a zero-sum game. It's looking at the ROI marketing, it's looking at the price war, but it's missing the bigger picture. And the bigger picture, of course, is peptides coming. And there was an announcement recently that perhaps BPC 157, not an announcement, a rumor, I guess, but perhaps BPC 157 and TB 500, which are really the big other peptides out there, they could be approved, or by approved I mean authorized to be sold in the US by October 1st. That could be an enormous catalyst for HIMSS, and of course the CEO alluded to that as well. Perhaps they will have peptides before the end of the year. Enormous catalyst. The market is entirely ignoring the big health revolution of today, which are peptides, which, by the way, GLP-1s, of course, are peptides themselves. And I'll conclude with this: retatrutide. Retatrutide is coming. I've said that before. I've said it a minute ago, but it's going to be a big deal because retatrutide is next level GLP-1. I think a lot of people are going to want to try retatrutide once it gets approved. And to me, that will create some enormous growth for a company like HIMSS. Just like tirzepatide is now creating quite a bit of growth for HIMSS because they have tirzepatide now. They didn't always have it. Now they have it. Right? They used to only have Ozempic. They used to only have semaglutide. So now they have the better one, tirzepatide. They're going to get an even better one because they sell from Lilly. They pass through the orders to Lilly now. And of course, they don't call it a partnership, but they still pass through these orders. So as far as I'm concerned, it's the same thing. You have one platform where you can buy your top GLP-1s, and HIMSS, I believe, is going to continue to be the number one platform in the US where you can do that. So anyways, I don't understand why the stock is so down. Let me conclude. This is mostly a HIMSS video. Of course, you may have seen my video. I did a full video on Nebius, what I like about the earnings. And my point in the prior video was that, yes, Nebius could reach $1 trillion valuation, perhaps in the 2030s, if they keep going at this space, if they actually operationalize and sell their 5,000 megawatt of secured electric capacity, if they actually develop it, put GPUs on it, and sell it at the current price that they announced, their short-term price, which was absolutely stellar, which they announced on the call. If they do that, a simple back-of-a-napkin math could show you that it's not that far-fetched to imagine a Nebius worth $1 trillion, if they could actually achieve that level of growth. But that's a lot of execution ahead, and that's a lot of time. And when I look at the price of Nebius, the weight went up 49%. That's not a lot of time, and nothing much changed. Nothing has happened, and really most of that rise was in 3 days. Nothing has changed. Nothing has happened. This stock continues to move like a casino. The 49% indicates a battle between the shorts and the longs and people covering their shorts. That would be my guess. My guess is that and that's the danger. If you have a stock who's up 49% in 5 days, that stock can be down 30% in 2 days, even 1 day. Right, that's happened many times for Nebius before. So my guess is, tread very lightly here. I'd be very careful. I think this runs too much, too far, too fast, and it almost makes these stocks uninvestable, right? Especially if you want a DCA, if you want to get to know a company. Like at 277 from when I started covering this stock, it's a 10x. It's a 10x. Psychologically speaking, a lot of people don't want to buy a 10x, So I like this stock better under 200. I like it better under 200. If it keeps going up, if the squeeze keeps going up, I might be looking to sell here. I think this is getting a little out of hand and a little too expensive. And the valuation, of course, I go by my spreadsheet. The valuation is clear, 0.18 versus 0.1. You may have a situation where on my favorite metric, Nebius could be actually twice as expensive as HIMS for a stock that used to only be about 30% more expensive than HIMS. So a high is hot. That's the only thing I can say. But this is too hot, and there's some odd flows in my view for that stock price. But anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.